It's time now for an in-depth look at the market news on this Friday, and for that I'm joined by Dr. Kim Sei-wan, professor of economics at Ewha Women's University. Dr. Kim, thank you for coming on today.
Good afternoon.
Well, the IMF this week lowered its forecast for global economic growth for this year. 3% is the figure now, the lowest since the financial crisis a decade ago. And for China, as we just heard, the forecast is the lowest in 27 years. What's happening in the global economy?
It is true that major economies are experiencing downturns from the end of last year, except the United States economy. IMF forecast this year's global economic growth would be 3%, which has been lowered by 0.3% compared to 6 months ago forecast. Particularly, Chinese economic growth forecast is about 6%. So as we talked about, it is one of the lowest in the last 30-some years. So I believe that Chinese economy is directly affected by U.S.-China trade conflict. And in addition, German economy is no good at all. Its economic growth forecast for this year is about 0.5%, which is really low. And Japanese economy's economic growth forecast is about 1% around. So current economic global recession is the most serious one after the economic crisis of 2008. But the problem is there is a possibility that it could be even worse. Even global risk factors are not well controlled.
Right. Well, just to clarify for our viewers there, the screen said the GDP forecast was 2% for the global economy. It's actually 3%. But for Korea's economic growth this year, Bloomberg's compiled an average of estimates from 41 institutions here and overseas. That average is 1.9% growth. What do you make of that figure?
Recently, Bloomberg averaged Korean economic growth forecast of 41 institutions, including ING, S&P, and other quite a few foreign institutions. And it was about 1.9%, which was much less than Bank of Korea's 2.2% economic growth forecast. Because Korean economy is one of the most foreign-dependent one, it looks that foreign investors see that Korean economy is structurally more vulnerable to global economic risk like U.S.-China trade war, Brexit, and Korea-Japan trade conflict.
Right. Well, to sort of turn this thing around, we have international organizations calling for the Korean government to ramp up fiscal spending. But what about the government's financial situation? There are concerns there, too.
I think expansionary fiscal policy or more spending by government would be the only and the most efficient buffer to Korean economy under a recession. The interest rate is already pretty low to its historical level, and it looks that it does not stimulate economic growth even with lower rate like 1%. And regarding Korean government debt situation, it is about 40% of the total GDP and about 660 trillion Korean won. And these are really healthy figures compared to other countries, like over 200% of Japan and 160% of the GDP of the United States. So I think relatively Korean government has a deeper and more resources to implement expansionary fiscal policy.
Well, you mentioned the option of lowering interest rates, and of course the BOK did lower its policy rate this week down to a record low of 1.25%. What are they hoping to accomplish with that, and at the same time, what might there be to worry about?
Bank of Korea has cut this policy rate for a second time to stimulate economic growth on Wednesday, and its base rate was cut by 0.25% of a percentage point to 1.25%. So as we talked about, the low interest rate or expansionary monetary policy does not save economy without the support of the expansionary fiscal policy. So under this difficult situation of the Korean economy, the policy cooperation between central bank and government is really crucial.
Right. Well, President Moon announced some other new measures yesterday, more investment in construction to help the economy. What stands out to you in these measures?
I think President Moon became pretty sensitive on economic status after understanding the recessionary situation of Korean economy. Particularly in yesterday's out-of-schedule meeting with economy-related cabinet members, President Moon emphasized revitalization of private investment and consumption. So along with implementing expansionary fiscal policy, he also reiterated government plans to increase investment in construction section, particularly on SOC, like railroads, highways, and so on. Actually, stimulating construction part is something avoided by President Moon because he has been blaming previous government for doing that. But I think he has changed his mind for revitalizing private sector. So we can expect that this construction activity led by government would activate the economy only in the short run. So in the long run, there should be more serious structural reforms and labor market reforms together.
Yeah, as you point out, I think it was a surprise to many people hearing construction investment coming from President Moon. But Dr. Kim, that's where we'll have to leave it today. Thanks so much for coming on.
Thank you very much.